Hey, folks. Welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, April 28th, 2010. Well, folks, we have the FOMC policy statement just out minutes ago. The market's initially acting to the upside on the back of a comment saying the Fed looks to remain or keep policy on interest rates extremely low for an extremely long period of time. That's essentially the verbiage coming out of the Fed. There was one dissenting vote, but anytime you hear anything like that, it's more than likely the dollar will see a little bit of near-term negativity or a drop, and that generally gives the markets a little bit of a bounce. And that's exactly what we saw here. Let me put up the UUP chart on the intraday basis, and you can see initially right here you made a little bit of a move down right here into the support area. You can see how this pivot high right here on the intraday chart on the UUP is support. So you dip down there. Now, again, the dollar is bouncing up. That's keeping the markets in check. So far, after the initial drop on the dollar and the initial inch up on the markets have now pulled back in. And initially, we'll see where they go over the next few minutes. But again, market reacting. You can see the volume surge, dead volume for about 2 hours prior to that FOMC policy statement that just came out, again, minutes ago. And again, the key with that, folks, you have to remember, it's all about what they were going to say. No brainer. No one should be surprised that they're talking about keeping interest rates as low as possible because they want the dollar to be weak. The weaker the dollar, the more likely the markets can stay up in their inflated range for a longer period of time. As soon as they start raising interest rates, they can't sell money or debt anymore to other countries. Again, it's going to cost too much. The interest rates on the debt that the Federal Reserve is creating or printing as they print money that the government, again, can sell and get money for, that again, the interest rates will rise on that, so it cannot be done. They have to keep interest rates as low as possible. That way, again, the market can stay as high as it is. And that's their goal, guys. We all know that by now. It's a no-brainer that their goal is to inflate the markets. They've inflated them beautifully. Now, can they continue to hold this market up? Right now, the markets are starting to inch down a tiny bit, but there's really not a huge increase in volume here over this last candle. From when we had a nice little surge there in that last candle, you're not seeing a continue here. That might mean that markets stay generally flat into the end of the day, which again would be a small bounce back day off the big drop yesterday. Now we're going to discuss everything that's going on. Overall, we got oil inventories today at 10:30 a.m. Eastern time. Not a ton of other information out on economic stuff. Tomorrow you'll get initial claims, jobless claims out. That'll be interesting to see again where jobless claims go. But right again here, you are seeing the markets basically flat on that FOMC statement, and the market's just going sideways. Now, to look at the charts, what are we looking at here? Now, again, the markets are beginning to inch up as the dollar starts inching down. So let's keep an eye on this possible buy program. By the way, guys, if you just want to take a look at the charts and analyze the charts, pure and simple, you have an in spirit of bull flag pattern here. Look at that. Upward move, sideways consolidation for about an hour, 2 hour time. Markets again inching up a little bit. So you have a minor little in spirit of bull flag. We'll see if it does play out or not. So far, it looks like it's beginning to inch up again on the markets as we continue to flip flop on back of that FOMC policy statement. Now, a couple other things to go over. As I said, resistance. You're looking at resistance right up in this level. This high pivot from yesterday right here. This high pivot right here from today. That's a range of 119.46 to 119.54. So there's about an 8-cent range right there of resistance. If you get through that, which is a decent probability if the market does get a buy program that you do get through, you could easily go to the 120 even number level. Now, after such a harsh sell-off yesterday, not surprising to see the markets inching up a little bit today. Remember, you can't kill a bull that easily. Anytime you see a downside move of that magnitude off of such a massive run in the markets, very likely you'll see a little snapback rally. That's what you're seeing today. Not a big snapback rally, as you can see. The markets, again, were sold off all the way from here to close all the way down here, and we're only getting a minor bounce back, basically what could be considered a daily in spirit of bear flag. But what you also have to realize is that the bounce back rally will come in. Every time you have a steep sell, this market has been so used to buying every dip, you're going to see a little of that even if it doesn't hold in the long term. And again, we're still waiting to see whether or not this market does hold in the longer term and start to inch back towards the double top, or do we start to create, again, as I said, a daily chart in spirit of bear flag for another sell-off in the markets, all right? Again, you can see the pop-up. There it goes, guys. So in spirit of bull flag starting to play out to the upside. And again, just notice the patterns. The patterns generally will dictate the way this market moves. Take a look at the dollar. Let's put up the dollar again. You can see the dollar starting to inch down again. This little down red candle right here now in this current candle is enough to give the market a little bit of an inching up. And again, you can see that buy program coming in on the SPY. Stocks in motion today. What's strong today? There's some big bounce backs. One of the hot charts and alerts, which is part of the research center, was a big winner today. That stock was on JP Morgan Chase. This is what I gave to the research center yesterday. This is it. Take the high from October, extend it through the high from January, and look at where the JP Morgan touched yesterday. See that? That's major support right there, due for a bounce. In addition, the 200 moving average, as you can see, let me zoom in again. Here's the 200 moving average in red, slopes up right there. They meet. That's basically what you would call a necktie on the daily chart. That is a no-brainer long play right there. Again, posted in the hot charts and alerts as major support and look for a bouncing area. The JP Morgan Chase is up $1.23 today. That's a big move on JP Morgan. So nice little play there for, again, Research Center subscribers in the hot charts and alerts. And again, underneath the Research Center, you get everything included in that hot charts and alerts, and we will be adding more things to that over the coming months as well. Now, other plays in motion today. Goldman Sachs up $4. Take a look at Goldman on the intraday chart. You can see nice little inching up here, again, on the back of the little buy program hitting the markets right now. That's a nice little mover. ExxonMobil is really carrying this market today. As you can see from a close down here, Exxon is actually up $1.15 on the day. That is a solid move on ExxonMobil. Really is a powerful move to the upside on Exxon, XOM symbol there. Google's positive, Baidu's positive. Baidu, BIDU, has earnings after the bell. Going to be interesting on Baidu because, again, it was in the area of major short going into earnings. However, now it had a really steep fall down off that little pivot top from a couple days ago. So the question is, does it continue to fall on earnings after the bell today, or does it rally back up? It's really more of a 50-50 now either way as it could go. If it was at the tops, I would have said it was about a 70% chance of falling, but because it already fell a little bit, it's factoring in maybe not so top-of-the-line earnings numbers. And again, I think the earnings are going to be fantastic. The question is, does a PE of over 100 on Baidu, BIDU, warrant that type of valuation? That's really what we're going to see today. Dollar is getting a big steep drop now, guys. Take a look at the UUP. Take a look right here. And again, this is all what the Fed wants. Remember, guys, the Fed wants the dollar to drop. That's their goal. Anyone who thought that they would come out with an interest rate harsh statement about raising is insane, in my opinion. Absolutely insane. There's no reason they're going to do that. They're not going to crush the markets. Not after yesterday's big drop, too. In the very least, just looking at the short term, you have to understand that the FOMC, the Federal Reserve, wants to not crush the markets 2 days in a row. They know that could spin out of control. They're going to want to prop up the markets, as they always do. And by talking weak dollar policy, low interest rates for an extended period of time, long extended period of time, you're going to see the markets again rally if the dollar falls. That's exactly, I wrote articles on the Ransom Rave blog all day long today, as did my partner, about how that would be expected. Again, dollar weak policy, and look at the dollar come down here, guys. Wow, that is amazing. Let's go back to the SPY. Look at the pop. See how that works, folks? Again, SPY, which is the S&P 500 ETF right here, pop as the dollar drops. That's all you have to know about this market right now. That's the way it's playing out. And again, that's exactly what the Federal Reserve wanted. Now, whether or not it holds up all day long, we'll have to see. I mean, just think about what's been going on. Take a look at the dollar getting crushed here, down to the 50-moving average. UUP is actually hitting support right now as we speak. And sure enough, as that hits, you're seeing the markets go up and hit resistance on the upside. But again, folks, going into the next couple days, keep an eye on Europe. Europe, a lot of crazy stuff. Portugal downgrading on debt. A bunch of these other countries. It looks like a contagion type atmosphere in Europe, where now Greece is having problems. Their Greece borrowing rates are like 18% right now. Just wait for all these other countries to have rising borrowing costs as well, or borrowing rates. That's going to be a major problem down the line. And that's really why the euro's been getting crushed and the dollar's been going up. That's the only reason the dollar's been going up, by the way, is because things are so bad right now in Europe in regards to that. As soon as things straighten up, you expect the dollar to fall even more. Again, who knows when that'll be. The contagion in Europe I do expect to last for months and months more. All right, that's enough for today, folks. Come join the Research Center. Come join the intraday stock chat. The winning stock trades continue to be pumped out in the hot charts and alerts. More today from yesterday, and there'll be more posted today for tomorrow as well. Small caps alert coming out as well. And again, we've had some recent runners as much as 500%, but a bunch of them as much as 20 to 50% in the recent weeks in the hot charts and alerts. Take care, folks.